All right, let's get right into it here. Looks like the market made that V-shaped reversal here ever since it came down late October, tagged at 408. That's the island upgate. We talked about that last week. This level, that 408, was a level. It was the must-hold level for the buyers because this is a level where if this level gets broken, if this island upgap is dismantled, bulls have no other real solid weapon to battle against the boss bears if they want to continue to push and keeping that uptrend dismantled completely. So that island upgap was definitely the must hold, must protect level, and bulls did that, and bulls did that in a hurry. Perfect. As you can see here, we gapped up, we got back up. That's pretty much all last week action here. Monday, Tuesday, Wednesday, Thursday, Friday. That's pretty much what happened. We pretty much went V-shaped higher and complete chaos in the boss bear headquarters. They did not expect to see something like this, because this is sort of this is not something that they used to, at least looking at the price action this year and last year. This market has been so lethargic, so methodical, and so choppy too. I mean, we rarely see a reversal, a clean reversal like this. I think this shocked not only the buyers, but I think it shocked the bears even more to have to face with something like this. And so here, we're here. So now this is the only hope for the bears, because you can see right here, this down gap that opened up in late September, as you can see right there. And that down gap was actually very sizable down gap, as you can see. And once that down gap came about, this market actually tanked about 4%. In about 2-3 weeks or so. Market subsequently rallied back up. However, as you can see, bulls failed to fill the entirety of that down gap, as you can see right here. So that was that first pop, and then there's a second pop, filled just a little bit more, and then there was a third pop, filled just a little bit more of that down gap from late September. However, we can clearly see that down gap was not fully filled. If you want to be my long-term follower of this channel, you guys fully understand that when the gap does not get filled, it does not get fully filled. In this case, this is a down gap. It's gonna favor the sellers. As you can see, this market tanked for 2 weeks straight, and it all came about when this down gap wasn't filled. And this was about 6% correction in 2 weeks, and it scared the hell out of the buyers. And a lot of buyers were so scared that they flipped bearish. They were full-blown bear after this. So now that we're dealing with this down gap that wasn't filled, and as you can see, after a big upside move here, all of a sudden, bulls are slowing down here because they know. Bulls know that last time when bulls got up here into battle with this down gap, right? Boss bears are still hanging out in this vicinity right now. And it is preparing to shoot down the bulls here. And bulls understand that last time when bulls got up here in battle with the boss bears, they were, brutally slaughtered. And so bulls understand that this is a very dire situation. They might see another huge tankage from here. So that's why bulls are threading very, very carefully here, going up, coming down, because we haven't seen this, as the market went straight up here. But it's really riding the micro-term moving average, as you can see, the aqua moving average, which I talked about in the last video when it was reclaimed. And bulls really utilizing that, because that micro-term is no longer supporting the sellers, or supporting the buyers now, once it was reclaimed here. So because not only that, we're also dealing with somewhat overbought sentiment. However, buyers are getting that oscillator moving sideways. This is a very common practice when the oscillator just seemingly not rolling over, but just kind of stuck either at the bottom of his band, like it's done here, or at the top of his band, right? What it does is, as the market gets to oversold, but he wants to keep pushing it down, making that like a pancake, flattening that oscillator. It's sort of a signal. When you see that oscillator flatten out like that, we don't know how long it can go. And obviously the odds are catching up here. So as you can see, that oscillator has been moving sideways, oscillating at the top of its band. And another thing is, if we do lose the microterm, you see that microterm? That's a microterm, right? We're holding above that level. And in that process, what do we have? We got this microterm higher high. Yes, that high is lower than this high, right? This high is higher than this high. Yes, so we got higher high in the microterm, but the oscillator hasn't crossed up or not down or either. It's very neutral, right? It's neutral because oscillator understands that this is level where bulls are really threading it carefully. Let's say tomorrow we see a down gap and then we lose the microterm and we see a bearish candle like this, let's just say, tomorrow morning, first 2 hours. Well, that oscillator will cross back down very swiftly. What's going to happen is we're going to have bearish divergence near that down gap area. And that's sort of how this market tanked last time. This is actually three peaks bearish divergence, as you can see here. Higher highs on the price action, lower highs on the oscillator. That's how this market tanked. So with the bearish, if the bearish divergence come to a fruition here, at the time you would have to kind of expect that bears going to at least, at minimum, fill this down gap and even trying to challenge that short-term moving average and the mid-term moving average, even the long-term moving average at 426 or so, which is also this up gap here. Or actually, I mean this up gap, right? This up gap, because it gapped up. I'm calling it an up gap. This up gap for sure is going to be filled pretty much if that bearish divergence come to a fruition. But then again, if that happens, this entire vicinity is going to be vulnerable. Because if that's what bears are working for right now and preparing to shoot down the buyers here, we could sort of consolidate at the top of his band, similar to what happened here, and then tank. So what really bulls need to do, if bulls really want to avoid the scenario of something similar to this effect, right? It needs to get up, which is not too far away. It's just few points away here. Fill this gap, the entirety of it, right? And just be done with it. And then maybe do something like that. And the next down gap is not until 447. So we'll be clear sailing to 447. Keep in mind though, once the gap gets filled, it would act as a resistance in the short term. But once it settles down, maybe the oscillator needs to reset or something like that, it can resume with this uptrend here. The best case scenario for the buyers is gapping up above. That will be the most smooth transition possible. Then you don't even have to deal with nothing. You don't have to deal with the resistance. You don't have to deal with this pivot. You don't have to deal with nothing. You don't have to deal with this bearish divergence. None of it. Everything will be nullified. The down gap, the resistance, bearish divergence, and it will just be a smooth. And there still be some kind of consolidation or something like that, but maybe still a little bit of fluctuation in the microterm. But that oscillator will gap back up and then a gap up, and as long as we don't see a gap and fade, right? We don't want to see that. It gaps up and holds it will be smooth sailing to 4-4. So this is an important level, right? This is very, very pivotal level. Market already made a huge move. Bulls are tired working with the overbought sentiment. Bears are really, really hating this move right now, and they really want to punish at least the late coming bulls here, and they want to see blood from this vicinity.